Good afternoon to you all. I am N. Satish Chaudhary, Company Secretary and Chief Investor Relations Officer of Divis Laboratories Limited. I welcome you all to the earnings call for the quarter ended 30th September 2020. From Divis Lab, we have with us today Dr. Murli K. Divi, Managing Director, Ms. Nilima Muthupatti, Full-Time Director Commercial, Mr. L. Kishore Babu, Chief Financial Officer, and Mr. Venkatesh Sarman, General Manager, Finance and Accounts. During the day, our board has approved the results for the quarter and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be available on the website of the company, divislabs.com. Please also note that the audio of the conference call is the copyright material of Divis Laboratories Limited and cannot be copied, rebroadcasted or attributed in press or media without specific and written consent of the company. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divis Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now I hand over the conference to Dr. Murli K. Divi, Managing Director of the company, for opening remarks. Over to you, sir.
Good afternoon to all of you. I welcome you all for the earnings call of Divis Laboratories. Hope you are all doing well. First, let me update you on global scenario on pharma and COVID-19 pandemic. COVID-19 has heavily impacted several industries, small, medium, and large. Pharma industry as such is less impacted because of need for life-saving medicines. This also created responsibility for discovering and manufacturing new APIs, antivirals, and vaccines. The developed APIs, hydroxychloroquine, favipiravir, and remdesivir, have added only marginal medical benefit and not become life-saving drugs, or none of them can be used as prophylactic drugs. A new drug is required which can prevent the infection, whereby it can be used prophylactically in doubt of contacting the virus. The new drug is also expected to reduce the viral load quickly, so that patients will not have severity of infection. There are few drugs in phase 3 promising, which may give hope to the whole world. How soon vaccines will be launched is still a big question mark. I'll cover a little CSR activities. As a corporate under CSR, Divis Labs is continuing helping 98 villages around our factories. Several programs have been taken up by the company or sanitization in view of COVID support activities, safe drinking water, promoting education, village development, livelihood enhancement, empowering women, environmental sustainability, Swachh Bharat, and GIFT. On CapEx programs, our project seems though delayed due to migrant workers in Q1. Now they are functioning fully and have completed some of the important projects. 614 crore rupees have been capitalized during the quarter. Several debottlenecking projects were completed. The remaining projects will be completed before end of the financial year. All the backward integration projects were completed, and this not only gives us assurance of supply, but also brings us savings by reducing cost of material. Few new blocks are planned for new major custom synthesis opportunities are under construction and erection of equipment. This investment of CapEx is to the tune of 400 crores. This new CapEx is in addition to the 1,800 crores CapEx. The majority of the utility expansion completed. Rupees 500 crores of CWIP projects are expected to be completed before the end of the financial year. Now I ask Nilima to brief on operations. Thank you.
Hello and welcome everyone to Divis Labs earnings call to discuss the unaudited results for the second quarter ended 30th September 2020. I hope that each one of you, along with your friends, family, and friends, are safe, considering the continued existence of COVID-19 pandemic and the sudden incessant rains witnessed recently in several parts of the country. As the COVID-19 crisis continues, we have improved in terms of adapting to it in our everyday lives and businesses during this quarter when compared to Q1. At Divis, we are closely monitoring the constantly changing and evolving situations relating to this pandemic, as we continue to strive and sustain our operations at a normal pace. Challenges like fluctuation in cost and availability of raw materials and supply chain issues have reduced compared to the last quarter, and we are optimistic in ensuring the uninterrupted supply of our APIs. Our response to restraining COVID-19 at workplace stays constant and consistent, with our main agenda being the safety and well-being of our employees. All protocols like thermal scanning and sanitization, social distancing and safe transport facilities continue to be implemented and shall remain so until further guidelines from WHO, CDC and local governments are given. The company has put in place several measures to keep up the business continuity and also sustaining steady supply chain network and servicing to our customers. Moving on to our Q2FY21 financial performance. As we all are aware, we are implementing a large CapEx program during the current half year. We have capitalized assets of rupees 830 crores. Of this, the new SEZ account to rupees 524 crores and rupees 132 crores is for wastewater treatment facility and utility expansion at EOU. We have also capitalized assets at other units for augmenting capacities as well as utility infrastructure. We have capital work in progress of rupees 499 crores as of 30th September. On operations, I am happy to state that we have achieved a consolidated sales revenue of rupees 1,749 crores during the quarter, reflecting a growth of 21% over the corresponding quarter of the previous year. Profit before tax for the quarter amounted to rupees 693 crores, a growth of 42%. We earned a profit after tax of rupees 520 crores during the quarter, reflecting a growth of 46% year-on-year. Exports accounted to 87%. We continue to have normal business distribution across regions, and Europe and US accounted for 71% of our revenue. Product mix for generics to custom synthesis is 60% and 40% of the revenue respectively. Constant currency growth for the quarter has been 18%. our nutraceutical business amounted to 167 crores for the quarter and rupees 294 crores for the half year. Thank you.
Thank you, ma'am. With this, we'd like to request the moderator to open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, request you to rejoin the queue, please. The first question is from the line of Vishal Biraria from Aviva Insurance. Please go ahead.
Hello. Thank you for the opportunity. So what led to the urgent need for expansion of the CCS capacity, the custom synthesis capacity? That is the first question.
I'm sorry, can you please repeat?
The expansion of custom synthesis capacity. So what led to this decision and how soon do you plan to complete it? Is it because of a movement from China to India or some other factors? Could you elaborate a bit more on this, please? Thank you.
Historically, I think you all have good experience at Divis that we do not invest just because we have funds. We do not expand because we just have funds. When we foresee an opportunity, we start investing. But this time, in the last 2 quarters, more in the last 1 quarter, we have seen from the very big pharma of international, Europe and US, we have received some very fast-track projects with a lot of incentivization, and these projects will have a very high return. And we need to finish them on a workforce basis. And these projects we have been doing. This is the one we are planning for 400 crores. And we hope that we have to complete in the next 6 to 9 months.
Okay. And the next question is on the contribution of COVID portfolio to revenue and EBITDA.
Can you please repeat your question again?
Sorry. The contribution of the COVID portfolio, COVID-related drugs, to revenue and to EBITDA, please.
Well, in the second quarter, what we are reviewing right now, there is almost zero. I don't know whether few lakhs, whether it is involved. Otherwise, we had no income from the COVID.
Oh, thank you very much. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Prakash from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good numbers. Sir, if you could help us understand the gross margin expansion. So both YOY and Q&Q. So sales mix, if I see custom synthesis to generics more or less similar. So not much change there. So in terms of product mix, what has changed? And given the supply disruption, pricing is healthier, if there is some commentary there. Thank you.
I think we have been saying always that it's very difficult to go by quarter on quarter between custom synthesis and generics. Definitely with the investment of the 18 plus the additional 400 crores, as we are completing them, we have already completed the debottlenecking project as I mentioned a few minutes ago, and we have also completed some of the expansion plans. And what we are looking at now is after validation, there is a gestation period of anywhere from 6 months to 1.5 years for the regulatory authority to clear the product, and also the customers validating the fresh product at their facilities. As these happen, you will see the incremental quantities in the quarter.
Okay, but I just wanted to understand what would be the sustainable levels actually. I mean, I understand quarterly fluctuations could be there, but with this debottlenecking and all, say 64 to 65% is sustainable, or we should model in 60 to 63?
60 to 63% of
The gross margin.
60 to 63%. And so, what people concentrate on how to save tax money, and the people concentrate on other things. But I think the majority of the expenditure is on the raw material. The majority is on overhead plant expenses. I think if you look at the several balance sheets, we have been able to hold on to around 55 to 60% quarter on quarter, while that's why we are able to retain good profits. And I think going forward, yes, we should be able to do 60%. That makes it not better. Now you commented that backward integration and other projects being complete. Definitely, yes, mentioned that it not only gave us assurance of supply, but also definitely with the new technologies we introduced, with maximum efficiency and high productivity, our costs have come down, raw material costs have come down. I think it's a combination of all these, what you are seeing, better numbers. Don't go by quarter on quarter, but I think we can definitely continue what we are doing.
Okay, understood. And my second question is on the CapEx. So, 4 billion exclusively for custom synthesis, but for the 18 billion that we announced some 18 months back, so of that 18 million, I understand 3 billion is for debottlenecking, and 6 billion for each of these Unit 1 and Unit 2. So I wanted to understand on that 12 billion, what portion or what percentage is attributed towards custom synthesis capacity?
I think it is, again, the blocks are not meant just for custom synthesis or for generic. The buildings are all multi-purpose. They can produce either a generic product or a custom synthesis product depending upon the need in the campaign. Some buildings are, yes, dedicated to a generic product or dedicated to a custom synthesis product depending upon its demand. But on overall, whatever we have completed, we are able to utilize between the DCV-SEZ and DC-SEZ. In the backward integration, we are able to use them fully. In the generic, we are able to qualify and start producing, and some products we have been able to export without waiting for the total regulatory authorities clearance. Some of them we are waiting, and in custom synthesis debottlenecking projects, they are yielding some of the sales already.
Okay, sir. Thank you. I'll join back.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, I wanted to know, there was this case in SEBI which was going on. So it has now been closed. So what is the status of the company's stance on this?
Can you please repeat?
There was a case against the company officials in SEBI. Recently that has been closed now. I want to know what is the status in terms of the stance of the company about those individuals.
The people who are involved have settled the issue with SEBI. Company has always been complying to the code of conduct and business ethics and shall ensure compliance as well.
I didn't understand. Hello.
Hello?
Yes, I have not understood what exactly you saying.
I think you mentioned that CFO and the others who have settled the issue with SEBI, company has always been compliant with conduct and business ethics and shall ensure compliance.
Well, Dr. Divis, can you speak without speakerphone because your voice is not clear at all?
I think everybody is hearing my voice clearly. I don't know why you are unable to hear.
No, I'm not talking about company being compliant or not. I'm asking, there was this case. Now I believe there has been a compromise arrived at and there has been a compensation paid by the individuals concerned. What is company planning to do about it is what I'm asking you. If you can formally clarify, that will be helpful.
I think company has nothing to say.
So there is no change.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi. Good afternoon. Thank you for taking my question. My first one is on the generic API segment. It has grown faster than the 21% that was called out based on the numbers that you shared on the call. So just want to know what are some of the building blocks, how much is price, is it largely volume led, or have there been new products that have been introduced? If you can help us give some quality.
We are fortunate that all the debottlenecking and capacity expansion projects we have done in naproxen, for example, 5,000 tons, gabapentin, 2,700 tons, valcyclovir, levothyroxine, levodopa, pregabalin, metharmine. All these products we have debottlenecked capacity substantially, and we are able to start selling the product without compromising on price. And I think this is what you are seeing, increase in sales. And going forward, we did, and some of the expansions which we have done are in totally new blocks that needs to get some regulatory clearance, because when we upgrade add new blocks, we always technologies, new ways of working, so that the productivity goes up and also the material costs come down, minimizing the waste. So all these will sometimes be viewed as a change. 2-3 smaller changes become a medium change which we are waiting for customers' clearance. So as and when they come, you will also see some more increase in sales in the generic products.
Got it. Thank you, sir. My second question is on the custom synthesis. Could you actually talk us a little bit about the qualitatively in terms of the number of projects that we have actually started doing? Are they linked in some form or shape to COVID, or this is in general the non-COVID portfolio as well? I thought you said phase 3. I think I couldn't pick up that comment clearly as well. So if you could share some comments around the custom synthesis business. And also linking to the point about the 400 crore additional, you talked about war footing. So just trying to piece together the entire custom synthesis segment, sir.
We have never been giving details on how many in phase 2, how many in phase 3, and this project, because the existence of the confidentiality agreement company is highly confidential, number one. That's why I'm position to explain how many projects with which companies and what we do. But therapeutic segments I am willing to talk. Yes, some of these expenses are for some of the discovery of COVID drugs, some of these are for some other therapeutic segments. It's a combination of the chemistry does not know whether it is for a COVID drug or a cancer drug or a blood pressure drug or something else. What we know is 24 name organic synthesis reactions. So a combination of few of the reactions, a COVID drug, anti-COVID drug, or can produce anti-cancer or anti-alpha or anti-blood pressure drug. So yes, we are involved in a combination of these therapeutic segments in the custom synthesis. That's why we have received some very fast-track projects and with a lot of incentivization, and we had to hurriedly do them. This is where this additional new 400 crores is going.
Sir, and last, just follow up there.
Mr. Srinivasan, so for any follow-up, request you to rejoin the queue, please. Thank you. The next question is from the line of Girish Bakru from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. Sir, great set of numbers. Last quarter, you mentioned that there is a possibility of new units starting production and same products and same technologies you could have launched from those facilities without inspection. Can you update on that if that has happened? And similarly, any color on when inspection can happen of these two units?
Yes. When I mentioned in the last con call, the Unit 1 and Unit 2 are situated in 500 acres each site. These are two sites with 500 acres each, where at Unit 2, we call it new DCV SEZ as a unit in about 60 acres of land. So this unit is acres of site is already cleared by USFDA. So the new blocks, new units we have built, usually they do not require if I am using the same technology and if it's for the same product. I can start exporting immediately by keeping some batches in stability. If I am making a new product or utilizing totally a new technology in these blocks, then of course I need to wait for the clearance of the whether it is US or others. So what I would say is that at Unit 1 also, where it is DCSEZ, where we are investing 600 crores plus, again the same, the total facility is USFDA inspected. The new blocks we construct in this DCSEZ, where some of it is backward integration, some of it is for the new product, we should be able to utilize fast production, and where we need clearances from US, we have to wait.
Thank you. And the second question was on the mix. I realize this new investment in custom synthesis is meaningful from near-term opportunity, but can you give possibly some color on how generic versus custom synthesis mix will change over 2 years? If that's possible, that will be very helpful. The ratio always, we would like to maintain 50 to 50. We would like to maintain 50 to 50% each. However, the customers in generic
and the custom synthesis projects decide whether we should be, whether it should be 60 or 40. Maybe for a few years, custom synthesis will take a lead, and again generics may catch up.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, congratulations for the great set of numbers, sir. Sir, regards the capex, that the cumulative capex of 1,800 crores that we have done. So, given the kind of enhanced productivity or improved profitability, what we are seeing since last couple of quarters, so is there a kind of, or is it fair to believe the asset turn of this newly added capex would be higher than the asset turn what our old assets are currently generating? See, the older assets seems that generating a revenue asset turn of something like 1.5. For newly added capex, is it fair to believe slightly better than the historical trend?
The capex we discussed earlier, 1,500 crores between two sites. Some of it was debottlenecking, which we completed. Some of it was backward integration, upgrading utilities, QC infrastructure, and modern wastewater treatment plants at both sites. Again, all these are looking at 5 years, 10 years, 15 years down the road, preparing for new regulations that would come. In addition to increasing capacity, the 400 crores, what we are talking about is purely on custom synthesis, with contracts being, in other words, the assurance and agreements being in place. It's not that we are looking at projects anticipating business building, which used to be the case, whereas now the business is in place and we have to complete these 400 crore projects quickly to get for the business to happen.
Okay. Just wanted to have a sense on the capex, on the same question, sir, like having seen a kind of a strong phase of capex over last current year and last year, which is again continuing. So after this, is it fair to believe that the capex momentum will see a kind of some kind of a stagnation there, and before we identify a new site, because Kakinada is also not seeing any progress from the administrative issue side. So is it fair to believe that we might not see any major capex going ahead in the near future, and possibly a couple of years down the line, once we see a optimal utilization level for the existing ones, till that time it would be a kind of a moderated capex phase for company?
Based on the opportunities we have, the existing sites probably we will not require major capex. Whereas we have been planning our unit near Kakinada and unit 4 near Nellore. These two units we have been planning to construct for a long time. The unit 3 near Kakinada, the government has almost cleared everything, and we hope to start somewhere in December, January, the construction activity. The capex could be there to the tune of about 600 crores on that.
Oh, okay. And about Nellore,
sir? So sorry to interrupt, but for any follow-up, request you to rejoin the queue, please. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hello. Thank you for the opportunity. Sir, clarification on the CapEx for custom synthesis business. So did you mention you expect to complete that project in another 6 to 9 months, and after that you can start executing orders which you have received? Hello.
Can you please repeat the question?
Sure, sir. Sir, I was looking to clarify. Did you mention the new capex for custom synthesis business that you are aiming to complete in next 6 to 9 months, and then after completion of project, you can immediately execute the projects which you have received from customers, right? That's what you mentioned earlier.
Yes, that's what I mentioned, that these projects came with incentivization that we have to complete on fast track. Yes. And on completion, they would immediately go into production. Yes.
Okay. Thank you for that. And sir, on the Kakinada plant, I missed your comment. So you mentioned you got the clearance from government, right? And then you can start work there?
Yes. We were waiting for the final clearances earlier. Now we have all, and we hope to start in December or January the Kakinada plant construction activities.
Didn't hear that number.
No. I said we would start in December or January activity of Kakinada plant.
Sir, any capex plan for that?
The capex is about 600 crores.
Thank you for your answers.
Thank you. The next question is from the line of Alankar Garud from Macquarie. Please go ahead.
Yes, hi. Thank you for the opportunity and congrats on the strong performance. So my first question is, in the last few years, we have seen the US contribution to overall sales coming down for us, while that from Europe has been increasing. Now, this is even applicable in the last 2.5 years, when the direct impact of the import alert shouldn't have been much. So any particular reason, sir, which you would like to highlight for this, and how should we look at the US contribution going ahead?
It's very difficult to say that what we ship to US or what we ship to Europe or what we sell in India or what we sell into the Far East, because the big pharmas have relocated several of their manufacturing facilities or outsourcing the dosage forms to either European companies or at their tax havens in Ireland or Singapore or elsewhere. So that is our reporting is exactly on to where we are shipping the product than whether the company is headed is in US or Europe or where it is. So the focus, I think, change. I think is the geographically it is different because several of the big pharmas have closed their plants and moved them either Europe or elsewhere. That's why you are seeing the reporting that way. I think what we need even in India, for example, some of the contract manufacturing of formulations is happening by the big pharmas from US and Europe. We have to ship on behalf of for the big pharma to some company in India whereby they export the dosage form. So I think our US business did not go down. In fact, I think it's in good shape.
That's helpful, sir. And my second question is, if you look at the top 5 customers for us, those account for about 35-36%. Yes, that number has been coming down over the past few years, but generally in terms of client concentration, it's a bit higher than most of our global peers. So just wanted to understand whether there are any conscious efforts to add more new clients and improve mining among some of these relatively newer clients.
There is no plan like that as such. Probably it is happening because we have been growing at a faster rate and adding more customers and more products. Because when you add more products, you will have more customers. That's what is happening. Or when you increase the capacity, you always will have more customers. There is no plan that we want to add more customers, but definitely we want to add more products and more capacity.
Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and congratulations on great set of numbers. Dr. Divis, if you could help us understand, out of the 1,800 crore capex that has been announced so far, how much have been able to utilize so far, because we have capitalized most of it and some of it is still remaining. And if you could help us understand, out of the custom synthesis program that you have announced and the Kakinada that you specified would be around 600 crores. So custom synthesis, I understand that would be available from next year onwards itself. And by when can we expect Kakinada, as it's a green field that you would be starting?
I'm sorry, I lost your first question. Can you please repeat?
I said, sir, out of the 1,800 crore capex earlier announced, how much has been is available presently? How much of it is available for this year? And I understand that we will complete, some of it is left, which we will complete by end of the fiscal, is what we have said already.
I think I mentioned that the debottlenecking program, whereby some of the capacity would go up, have been completed, and we are seeing some of that benefit, number one. Two, some of the capacity expansions for some of the generic products that also have started resulting the fruits. There remain some projects where, for the as well as API, we validated and we are waiting for the customer as well as the agency clearances. As we get the clearances, they will go into the production. Coming to the Kakinada investment, first it would take about a year or a year and a half to complete the project. Then it goes through the validation and qualification. So that investment would take time to give us returns, maybe more than, I would say, investment, project construction about a year and a half, and sales start after another year and a half, 2 to 3 years.
Oh, and sir, I mean, on the brownfield capex, on the 1,200, I understand that we have completed the backward integration as well as the EOU related capex, but on the brownfield, how much we are able to utilize as of now?
On the brownfield, also there were backward integration projects on the brownfield as well as the new block. The backward integration, already we are able to use about 20-30% of the capacity. Remaining of the buildings, we are waiting for the regulatory and others to clear the utilization.
Okay, that's helpful. And sir,
Ms. Carvalho, ma'am, sorry to interrupt, but for any follow-up, request you to rejoin the queue, please. The next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks for taking my question, sir. So on the nutraceutical business...
Mr. Agarwal, can you speak closer to the handset, please?
Yeah. So on the question of the nutraceutical business, how should we, what opportunities do you see in the nutraceutical business going forward? I mean, this year has been a pretty good year from a growth perspective for this business.
The nutraceutical business is growing about 10% plus That is the growth rate right now, maybe 10 to 15%. About 600 crores is the expected this year. And going forward, we are looking at 15 to 18% as we are reaching more and more market. I think the trend in the industry is to go for more nutraceuticals, and I think there may be a slightly disturbance with this pandemic, but definitely the goal is that it will be more nutraceutical usage in the coming years. And we are geared up to take all advantage by having backward integration of API as well as the formulation.
Thanks. And secondly, on the custom synthesis project that you talked about, just want to clarify, is this a single project or is it a combination of projects for which you're putting the capex for?
It's a combination of projects from several big pharmas. It's not one project or two projects.
Okay. Thank you. That's enough.
Thank you. The next question is from the line of Ankush Agarwal from Stallion Asset. Please go ahead.
Hello, sir. Thank you for taking my question. My question is on the CSM business. Can you help me understand a little bit on the business mix that we typically have in terms of projects that we undertake during the development phase of a molecule versus projects we take during the commercial phase of the molecule, wherein we are the second supplier? If you can highlight something on this.
I think we need a little more clarity because we are not in the clinical trial. We are not in the gram scale. We are not in the few kilogram scale. When it passes through phase 1, that's when we enter in phase 2. That is when the chemistry will get locked up. So we enter not in the when the chemistry is in the nascent stage. We enter when the chemistry will be robust to produce in tons of quantities. That's when we enter at phase 2, 3. So the impurity profile can be controlled and the productivity can happen and the best technology can be used. So our involvement is from phase 2, 3 and then be in the launch, then travel through the patent period. That is we are not joining as a second supplier for an innovative product. No. That used to be the case. I'm talking about 10, 15 years ago. But now majority of us are new, entering in phase 2, 3. And yes, in some cases, if the big pharma wants to close several hundred tons of it, or they need all of a sudden several hundreds of, there are not many companies that can handle with resources and technology, with assurance of supply to cater to the needs of these big pharmas with stringent ESS requirement, stringent quality requirements, regulatory requirements. This is where we are strong at.
Okay. So just to be clear, for the most part, in the CSM business, we enter during the phase 2, right?
We enter in the phase 2, phase 3, yes.
Yes. Okay. And secondly, sir, typically in the CSM business, we do batch manufacturing and not the continuous manufacturing, which is what my understanding. Is it right?
That's right. Most of not most, 90% plus or 95% plus APIs are produced on a batch process basis. We are developing some technologies for a continuous processing, but I think there are some limitations. But we are able to implement continuous processing of at least certain stages or certain operations, not where we need to really control either a impurity or a safety. We are able to implement, but as a product totally, it's not that you put raw materials in one end and the product would come out at the other end continuously. No, there is no such possibility in an API.
Okay, got it. That was very helpful. Thank you.
Thank you. The next question is from the line of Lakshmi Narayanan from ICICI Mutual Fund. Please go ahead.
Yeah, thank you. Sir, on the custom synthesis business, approximately how many clients we have, what kind of repeat business we get on the CS business, and it's also mentioned that top 5 products contribute 47% of revenues. Does it have any custom synthesis product when you talk about these top 5? The next question is that in terms of reactors, we have commissioned BCV and we have put up some reactors. From the efficiency of reactors, what you commissioned earlier to now, how you improve the versatility and the size of reactors? So these are my 2 questions.
I think your first question is the 5 products in the custom synthesis are how many companies we have in the custom synthesis. The relationship, the existence of the relationship is disclosed in number 1, but definitely we have many big pharmas as our clients. And we do get repeat businesses because of the good business we do with them and good service we give them, both supply on time, all the time, and quality products with no rejections. These are the minimum expectations, and not only at the best cost, best quality, and with all the AHS requirements and quality requirements and regulatory excellence. The product.
So my question is, among the top 5 products which you call out as 47% of your revenues, does anything is in the CS business or everything is in the non-CS business?
Most top 5 products in the non-CS business, because we do enter at the phase 2-3, but after phase 2-3 they go to launch quickly. So we don't do the 50 molecules in clinical trials and 80 molecules in clinical. We don't do that because the killing rate or death rate or whatever you call it, the falling rate is very, very high there. It's high risk. High reward, I don't know. But definitely we are not in that business. We have been saying that from the beginning.
Sir, on the reactor thing, the second question is
the number of reactors, yes, we have the traditional reactors. What we were using is totally different from what we use now. From the traditional, we have changed from design to our own design, from whatever is available in the market, designed to our own designs, both from the point of view of material of construction to the way it mixes, the way it can be multi-purpose used, to arrive at the right particle size and right quality and right form. Because it's not producing API important today. You have to produce the right form and right particle size. So definitely the quality of reactor is totally, design of the reactor is very important today, and it has changed a lot from the time we started.
Thank you.
Thank you. The next question is from the line of Mitesh Rathod from Nippon India Mutual Fund. Please go ahead.
Yes, sir. In the custom synthesis business, are you seeing additional inquiries from clients, but you are not committing to them because you will wait for this current capacity build-up to happen and the progress on that, you will wait and watch, and then eventually you will commit to those kind of inquiries?
I am in a fortunate seat with all my discipline in holding on to my money instead of venturing into other activities. What I meant is that the 1,800 crores of cash we have, or 1,000 crores of cash at any given time in my hand to invest on project expansion and come up with capacity. We have not turned down any project from any big pharma based on not having capacity, not being able to build capacity. We may have turned down few projects where the technology is not available with us, like monoclonal antibodies or fermentation or steroids or hormones, or the price pressed so much on the therapeutic segment that we were not interested in the project. But looking at normal therapeutic segments, a good product, there is no way we would leave an opportunity. We have all the capability and capacity to create or somehow accommodate, because all our plants are multi-purpose, all our buildings are multi-purpose. So we could always make a product without any issue.
And so my second question would be, how supportive is the Indian government, both state and central, in terms of your capex execution, and have you seen any major change in the stance from their support?
Fortunately, I think for all the exports we do with the big farmers, with all the funds we have in-house, it's only regulatory clearances we need from the Pollution Control Board and various other governmental bodies, and we receive excellent support from either the state or the center. We have absolutely no issue, and we get a lot of encouragement.
My question was more post the recent PLI scheme. Are they incrementally more supportive in terms of clearance of approvals?
I think we did mention even in the last phone call that the PLI scheme is not beneficial to us, because the products that are involved in the PLI scheme are, majority of them are antibiotics and others. We are not in those products.
Thank you.
And it's only 2.5 crores they would give per product, per applicant, and the investment we are doing, 2.5 crores would not make any dent.
Thank you. The next question is from the line of Charulata Gaetani from Dalal & Broacha. Please go ahead.
Yeah. Hello, sir. Congratulations on the good set of numbers. My question is about the gross profit margin. There is a remarkable increase over the last 3 quarters. Can we assume it as a new base for going forward? Or if you could give a range of margins?
Well, the intention is to have better margins always. Every company wants to have better margins. We aim for same. But the capex is not only for increasing the margin. As I mentioned, that capex is to have these factories, what we have, be ready to face all the regulatory challenges that are going to be posed in the next 5, 10, 15 years, from environmental EHS to quality regulations internationally. In addition to creating higher capacity with new technologies, while doing this backward integration and new technologies and new products, definitely the margins should improve.
Okay, so we can assume around 63 to 65% range for gross margins going forward?
I have been very conservative from day one since 95, since I started the company. I used to say 50%. Now I have graduated to say 60%. I think my younger generation may promise you 70. I don't know in future when I retire and when they take over fully. But right now, I am very conservative person. And I think a 60% definite is my saying. And always say the product mix is the problem. It's not, I want to drive it to 70%. But what happens, the product mix, one product goes down, one product goes up. A combination of these products makes it, and some competition from all of a sudden comes from nowhere to kill a product in generic. All of a sudden, 20% less price available, should we sell, not sell? With our marketing team faces the challenges, and sometimes they do have to agree with the customer and reduce the price, sometimes. So I think it's fair to say that 60% can be maintained.
Okay. And pertaining to the expanded capacity, by when do you expect regulatory clearances?
You're talking about the Kakinada plant and that one?
Yes. And the custom synthesis.
No, the custom synthesis 400 crore expansion should start yielding from the very next year. As we complete the blocks, they will produce. The Kakinada plant, it will take about 3 years because 1.5 years will go. Since it is a greenfield project, about 1.5 years, and qualification batches and validation, another 1.5, about 3 years.
Thank you. The next question is from the line of Naresh Sutar from SBI Life Insurance. Please go ahead.
Yeah, thank you for taking my question. Sir, my question is regarding this quarter's superior number. So many of your peers have talked about the clients stocking the API for ensuring the continuity of their supply, and hence the preponement of some of their orders. So have you also seen similar trends, and that's why the second half would be similar or little lower than the first half?
I see it is always that people, for some time, they want just in time. The product just in time. That means they don't want any stock. They want stock as needed. They say assurance of supply, please keep 30 days stock. So I think it is the management philosophy which keeps changing at the customer end time to time. However, I think all quarters cannot be same, and we don't control anything, neither purchase orders nor shipments. So our aim is to continue selling whatever we produce. But you take, for example, the quarter 3 almost every year, that everybody who closes their financial year in December, they would say, no, we don't want any stock, please postpone to the January. Don't ship us from December 10th or December 5th, So we don't manage any of that. It just happens. So please, my request is, do not judge us or do not go by quarter on quarter. Look at year on year as a overall. I think that will be a better way of looking at it.
Thank you, sir.
Thank you. Ladies and gentlemen, due to time constraint, we take the last question from the line of S. Mukherjee from Nomura. Please go ahead.
Yeah, so thanks for taking the question. So just wanted some color on the API generic business. Now you mentioned about debottlenecking, and you mentioned the kind of volume that you're seeing in some of the older products like naproxen, gabapentin, etc. Now I would assume that these are very mature molecules and growing slowly. So what's your expectation of growth here? Will you be able to take more market share? And so just going forward, what would be the key driver, whether it's the older basket of products or new APIs that would drive growth? If you can give some color, sir.
Yeah. I think that was a good question. I think the problem is that my grandparents did not live more than 50 or 60 years. My father lived 93. I'm dreaming about whether I can reach 100. So when people are living longer, they need more life-saving drug support as long as they live. Most of the generic products, the naproxen, the gabapentin, the sartans, the levetiracetam, the levodopa, carbidopa, and pregabalin, all these are lifestyle drugs. And as you live longer, you have to use them till the end. So as a result, the growth may look smaller when you say 8% growth or year on year, or 10% growth or 6%. But when you look at a product of tons of naproxen growing at 10%, let's say 8%, you need another 650 tons a year in 1 year, and there is nobody to invest a 200, 300 crores for a 1,000-ton plant. Whereas we are ready to invest when what we built is already sold out. What we expanded is sold out. So my marketing man, Mr. Prakash, Vice President, comes to me, what next? So you mean to say you want me to build one more naproxen block for another 2,000 tons? That's where we are in discussion already. The same thing goes for the few other generic products. See, it is like, I think, aspirin, paracetamol, crocin, we still need, and they are still expanding. It's having a better process and more profitability should be made by designing more newer process.
Okay. And so just one more question, actually two, if I can. So one, in the last call you talked about, you are developing some of these COVID drugs like remdesivir, intermediates and API maybe, but you mentioned there is no sale here, so just wanted to get that clarification. And also, sir, on you mentioned about Nellore units. Any timeline on capex there and the quantum of capex?
I think yes. When we developed the process for hydroxychloroquine, favipiravir API, and also the advanced intermediates for remdesivir, the intention was that if this would save the world, if this would save the lives against the pandemic, we wanted to make sure there is no shortage. But fortunately, it seems that there is no shortage of these drugs. At the same time, they're not fully being, I don't want to comment on their efficacy, but I think it's not that they are able to prevent the death totally. So we have not made any further batches after initial production, and whatever it is there, probably the sales were there. That's why I made a statement saying there is no significant sale in this quarter, maybe few lakhs. Going forward on the Nellore site, yes, we have the 200 acres of land, the wall being constructed and waiting for all the clearances. And first, I think we would construct the Kakinada plant, and then we would go, it looks like.
Okay, sir. Thank you.
Thank you. I now hand the conference over to Mr. M. Satish Choudhury for closing comments.
Thank you all for joining us today for the earnings call of Divis Laboratories Limited. In case you need any further clarification, please reach out to our investor relations. Thank you.
Thank you.